Inflation just hit 9.1% and grocery stores are saying enough is enough. They are starting to fight back. And I actually think that in this environment, there are some great grocers that could provide really good investment opportunities. That's what we're going to cover in this video. So guys, smash that like button, subscribe if you're new, and of course, if you're in the know, drop a meow in the chat. You're watching More Money, let's get it. What's up guys, and welcome back to the channel where the goal here is to help at least 1,000 people achieve financial independence much sooner. And let's dive right into this one. So you can see here, Walmart has told suppliers that as of August 1st, there's going to be a new fee when it comes to picking up goods. And the point of that new fee is to cover transportation costs that have risen for Walmart to transport the goods from the suppliers into the Walmart distribution system. And it's not just fuel. You guys might think it's just might be fuel, but it's also, they recently raised the wages for their truck drivers as well, because truck drivers are in short supply. So they're feeling a pinch both on fuel and wages, and of course, just servicing broken down trucks and such. Everything's much more expensive right now. So Walmart is really feeling the pinch in their logistics network. And so they're trying to tack on fees to suppliers to pass some of these costs on. And the article goes on to say that Walmart said it would charge some of its suppliers a new fee to transport goods to its warehouses and stores, what I mentioned earlier. And so they're calling this fee a fuel surcharge and a collect pickup charge, which is starting August 1st. But here's the thing, I don't know how much of a fuel surcharge this is, or a true fuel surcharge. I also think it's covering additional costs that they're facing, but they just don't want to talk to the merchants about it. You can see here, the collect pickup charge is calculated as a percentage of the cost of goods received by Walmart. The fuel surcharge is based on the cost of fuel to transport the goods. And I don't really know if that's based on weight or truckload. At least in the article, it's not mentioning it, so I just wrote that in the note down there. But note that some suppliers are criticizing Walmart for not sharing the expected charges more precisely and not giving them more time to account for the added cost. So there is a little bit of a pushback there. But I will say that in my opinion, I think it's a lot cheaper for people to still use the logistics network, and the article actually mentions that. Suppliers can stop using Walmart's collection shipping service and switch to what's called prepaid shipping when the supplier arranges and pays for shipping on their own into the Walmart supply chain. But of course, like I said, it's probably cheaper to just use the Walmart's logistics network, especially if you're not giving huge truckloads of product to Walmart at a single time. And this isn't anything unexpected. Walmart did say on their recent call that they're going to do whatever it takes to sort of like get inflation in line. Part of the reason why their share price dropped is because they also had that wage hit as well. They're going to get that in line as well. And so this is what we expected from Walmart, but Walmart's not the only one. Now, with that said, I do believe that despite the inflation readings that we just received, I do believe that the consumer is starting to slow down. We can see evidence of that all over the place. The Wall Street Journal even reported that pay raises, although are historically high, they are not eclipsing inflation. So in other words, people have experienced negative wage growth in this environment. And so the rise of 5.5% in hourly earnings compares with now 9% in inflation. It's just not enough to make up the pace. And so, but as you can imagine, this is going to cause the consumer to slow down, and it could cause them to take fewer trips to the grocery store. So the first thing that the grocery stores will look to do is push back on suppliers to see if there's any wiggle room in the profit margins that the suppliers take. And so you can see that happening already. Kroger's and other supermarket chains are actually asking vendors to justify higher prices, while some retailers are actually seeking different suppliers. And so you can see here that the tension between retailers and suppliers is industry-wide at the moment. And like I mentioned earlier, you can see here, consumers are buying groceries in bulk and switching to less costly store brands, pulling back on some pandemic spending habits to save money. And so, of course, this pressure is downstream. It's coming from consumers that are feeling the pinch, and thus they're changing their spending habits. So you can see that if the consumer is feeling pinched, obviously the retailer is going to feel pinched, and so they're going to put the pressure on the supplier. So throughout the whole supply chain, there is a pinch as a result of these inflationary impacts. Every single person is feeling the impacts right now, and you can start seeing that in the share prices of retailers. Of our top 15 or 20 names that the Patreons get access to of our tracker, there are more and more retailers that are falling amongst those top sort of like least expensive names that we're seeing now. And despite that, I think there's some diamonds in the rough. For example, Sprouts Farmers Markets, which is a grocery retailer in the US, actually provided some really strong guidance, in my opinion, in this environment for the type of company that they are. In their Q1 2022 earnings conference call, they did say that they expect top-line revenue, same-store sales, and EPS to sort of be at the low end of their outlook, which is still pretty good from my perspective because that reflects at least 4% of total sales growth over 2021, which was very high to begin with. And they're expecting somewhere around $2.14 per share of EPS this year. And I just can't get there in my valuation. But despite that, the fact that they're reiterating that valuation or that EPS for the current year or fiscal year 2022, that's very strong guidance in this environment. And you can see in my model that I gave them 4% sales growth year over year, but I don't think they hit that $2.14 EPS in fiscal year 2022. I'm falling slightly under that at $1.96 per share. And why is that important? Well, it's important because I actually don't think that they get to their current year EPS until next year, so a whole full year after. But despite that, this is still a cash generating machine. And what exactly are they doing with their cash? Well, they're very well capitalized. They have a very strong balance sheet and they have a net cash position. And so they're doing the prudent thing in this environment when their shares are trading under their intrinsic value. They're buying back shares to the tune of $50 million per quarter. So very accretive in my opinion. And so the question is, how do you know that these repurchases are accretive? Well, I have a full valuation model that the Patreons get access to. And from the valuation model, you can see that despite the pessimism that is in my forecast, where I actually don't believe in management's 2022 estimates, I still believe that the company is growing and it's unfairly trading at less than 13 times earnings. And so I'm valuing them at approximately $43 per share. Their current share price is $25 per share, which reflects 58 or 59% of their intrinsic value. So quite undervalued in my opinion. And if you want access to that Sprouts Farmers Market model and all the other models that the Patreons get access to, including the tracker, you can get access to all of that at the lower tier for the Patreons. And if you want to join a live epic presentation each month where I save my very best work for the call, you can get access to that at the higher tier. And like I always say, there's never any risk to you because if you decide to try it out and it's not for you, let me know within the first month and I'll fully refund your subscription. Now, with that said, there's something very important happening in the market right now. Michael Burry just predicted what is referred to as the bullwhip effect. And that could actually really impact retailers as demand signals could signal too much or too little products in the supply chain. And I actually went over that whole phenomenon right here in this video.